Tax refunds start rolling out, the national average is right around $2,000. But before that cash burns a hole in your pocket, here's 5 things that you can do to make your money work for you. I'm Bradford with a Pain Pinch Guide to Personal Finance, and if I told you there was a way you can take your refund and make a guaranteed 10 to 20% ROI with no risk of losing it, who wouldn't want to take advantage of it? But it's actually an opportunity available to over half Americans without any complex strategy or special connections needed. It's simply paying off your high interest debt. Now stick with me here. If you take your credit card and you've been carrying a balance on it, let's say with about an average interest rate of 15%, and you start putting money towards that debt, paying it down, that means you are no longer paying that interest to the credit card company and are in fact making 15% back that you would have otherwise had to pay to the company in the first place. That means that by paying down the interest rate on your credit card, you are making an effective ROI of whatever interest rate your credit card has. Ben Franklin's saying of a penny saved is a penny earned is entirely true. And nowhere is it more applicable for most people than when it comes to paying down your debt. And like I mentioned earlier, that ROI you're earning is entirely risk-free. When you pay off your debt, there is a 100% chance that the money you take is going to decrease the amount of debt that you have, and you're going to be saving the interest that you would have otherwise paid to your lender. Now, with any other investment, regardless of what it is, there is always a risk, no matter how small, that you are going to end up with less money at the end than you started out with. So that means you're actually getting a better ROI than whatever the interest rate is that you're paying down, because you're taking out the element of risk that you would have to account for with any other investment you make. And you can apply this line of thinking towards credit cards, HELOCs, student loans, car loans, basically any sort of consumer debt. Now, if it's something that helps you actually build wealth by using leverage, things like a mortgage or an investment loan, that's a different story. But if you've used credit to be able to live above your means and buy things that you wouldn't have been able to afford otherwise, using your refund and putting it towards that sort of debt is going to make you much better off in the long run. The next thing that you can do that's going to put your refund to work for you is either to start or top up an emergency fund. There will always be things that come up like a blown tire, a leaking pipe, or emergency vet bills. Having an emergency fund is going to take what would otherwise be a financial emergency as well and make it a financial inconvenience because you have the money to be able to pay for it up front. This idea follows the same principle of paying off debt, but by having the cash in the first place, you do not have to turn towards using a credit card or some sort of loan to be able to pay for whatever emergency comes up. You're able to pay for it with the cash that you have on hand and avoid taking out a loan and thus paying interest to somebody else. But aside from just saving money, with how high interest rates are across the board right now, you can easily take your emergency fund and put it into a high yield savings account and make close to 4% in an FDIC backed account, which means that there is no risk that you lose your money. Now, a good rule of thumb when it comes to figuring out how much money you need for an emergency fund is to take your monthly expenses minus giving, saving, and investing. Take whatever that number is and multiply it by 3. This is the amount of money you need for your emergency fund. Now, this is going to equate to a 3-month emergency fund, and you can certainly need or want a larger one, especially if you do contract work where your work is seasonal. You might want to have a larger emergency fund to be able to carry you through gaps in your employment. But by throwing your refund towards an emergency fund, it is at least going to give you a good solid start towards getting one started. And especially if you have a very large tax refund year to year, it could potentially cover the entire amount of emergency fund that you need in the first place. And once you've got a handle on your debt, as well as having an emergency fund in place, now you can start using your refund towards things that we more traditionally think of as ways to make money. Take a look at your investment situation. Whether you have never invested before or you invest on a monthly basis, using your refund and putting it towards a 401k or an IRA is a great way to make your money work for you. Now, there's 2 ways to approach this, whether it's with a Roth or a traditional investment account. Now, with a Roth IRA or a Roth 401k, while you're going to be paying those taxes up front, what you're saving on is in the long run by never having to pay any sort of capital gains on any of the growth that occurs within your Roth account. Now, on the other hand, if a traditional avenue is better for you, whether it's a traditional 401k or traditional IRA, you're not going to pay any taxes right now. And if you take your tax refund and put it in towards a traditional sort of retirement account, that means you're going to be lowering your taxable income by the amount of your refund if you put the whole amount in there. And as of 2023, the IRS has raised the maximum contribution limits for all retirement accounts, which means there is never a better time than when the IRS first raises those limits to use your refund to make your investment situation as solid as possible. Now, at this point with tip 4, you have made a solid financial situation for yourself. You got rid of your debt, you have an emergency fund, and you've started investing regularly. At this point, it's time to start looking inwards and investing in yourself. Your refund is probably a couple thousands of dollars, which means you can take that money and use it to better yourself and make yourself more employable or make your current employer want to pay you more by increasing your skill set. Think about your line of work. What areas are valuable to you in whatever sort of industry you work in? Could you take that refund and go take a class or get a certification that would help make you more employable and make employers want to pay you more? Is pursuing a higher education something that you could put this money towards that would make it better for your line of work? Are there any sort of conferences that you could go and attend and network for better opportunities? Or what about putting your tax refund towards the startup funds you might need for the business that you've always envisioned? Sure, your refund is not going to cover for everything, but it's a couple $1,000s that you can put towards starting up whatever your dream is. And hey, especially with all the options we have available to start right from home, there's a lot lower startup costs towards working from home compared to some other options out there. And this option can certainly give you the freedom that a weekly 9 to 5 doesn't. And lastly, the final tip is that sometimes you just need to take your money and go enjoy it. After all, it is your money. Sometimes you just need to go and buy that TV that Walmart has on sale and put it up in your living room, enjoy watching something on a larger screen. And while you're enjoying whatever your tax refund buys you, you're going to want to check out and see what you could have done to make your tax refund even larger. Thanks for watching, and from your first penny to your first million, we're here to help.